Hi, everybody. This is Julie Kaley, broker owner of Merced Homes Realty, located in Merced, California, 920 West 18th Street. Thank you for joining me today. Again, I'm continuing my series on providing educational videos, podcasts, and information regarding HUD Homes. And I decided to do one today regarding lending on HUD Homes and a lender Q&A handbook, and going over that and discussing that with you in regards to HUD Homes from a lender point of view and things that a lender might need to know. So I've got it pulled up on my screen here if you're watching this on video from BLB Resources, the lender Q&A. And no worries if you're not in front of a computer and you're just listening to this on a podcast. That's wonderful. Also, I'll be able to walk you through everything, so you don't necessarily have to have the screen in front of you. And thank you to those who are joining me live. And I really appreciate you taking time out of your day to tune in and listen and watch. But no worries, if you are not able to be in front of a computer or stream this now, you can always go back and listen to it at your convenience. So one more time, again, my name is Julie Kaley. I'm the broker owner of Merced Homes Realty. We're located here at 920 West 18th Street in downtown Merced. My license number is 014-12616. And again, this topic is regarding HUD Homes and lending on HUD Homes, and specifically lender Q&A, questions and answers. So HUD uses an asset management company called BLB Resources, which is based out of Irvine, California, and they handle HUD Homes throughout various areas of the country. And one thing they do is contract with local real estate brokers local to the properties that they have to sell, and those are called local listing brokers, such as myself. And what we do is we work on behalf of BLB Resources and HUD to market, list, sell, and be the liaison between the buyer, the lender, the closing company, the buyer's agent, and HUD in order to help facilitate the closing of their transactions. They have very specific processes in the way that they do things, which varies a little bit from our traditional way of selling real estate. And one of those things that is different is the way that their lender guidelines are and the way that they interact with lenders. So this is a Q&A booklet that has been put out by BLB Resources to people such as myself, the local listing broker. But it is available for us to share with lenders out there if you're lending on a HUD home. So this one is particularly for our region, which includes Alaska, Arizona, California, Hawaii, Oregon, and Washington. Now, obviously, I'm just licensed here in California, so I'm only going to speak to lending pertaining to California. Okay, so these first part of the handbook here just goes over like what is a HUD home, who is BLB Resources, the asset management company. I always like to go with what is a HUD home to start with that. And I'm just going to share with you the definition of a HUD home. A HUD home is a home that has gone into mortgage default with a loan that is insured by the Federal Housing Administration, or FHA, and those would be considered HUD homes. When this occurs, when it goes into default, the lender takes possession of the property and conveys ownership to HUD. HUD then sells the home to their asset management contractor, such as BLB Resources. A HUD home may be a single-family home, a townhouse, a condominium, a mobile home, or a multifamily attached home up to 4 units. Basically, anything that could have qualified for an FHA loan would have the potential to become a HUD home. Who can purchase a HUD home? A HUD home can be purchased by any person, company, HUD-approved nonprofit organization, or government entity that can secure financing or pay cash for the property. There is an exclusion for local listing brokers such as myself, our affiliates, owners, managers, employees, sales agents, brokers, family members, and business partners, because they don't want to have any conflicts of interest. When HUD gets a property and they are getting ready to put it on the market, they're going to give it an insurability ranking. And it's either going to be insurable, insurable with a holdback, or uninsurable. Or uninsurable but eligible for 203K financing. In addition to giving each property a category of insurability, they also have 5 different purchaser types that they categorize their buyers. So HUD is very concerned about promoting home ownership. So their first category of a buyer is an owner-occupant. And an owner-occupant is a person who plans to live in that property as their primary residence for at least 1 year and has not purchased another HUD home as an owner-occupant within the last 2 years. Okay, that's the definition of an owner-occupant from HUD's point of view. An investor is a purchaser who buys the property as a second home or as an investment, who does not otherwise qualify as an owner-occupant. The third type of buyer, good neighbor next door participant, is a qualifying officer, teacher, firefighter, or EMT. There's a whole section on Handbook for Good Neighbor Next Door that goes over the eligibility and other program requirements. Next is government entity. Includes counties, cities, and townships, foster housing opportunities by purchasing HUD homes at a discount, making any necessary repairs, and then selling those homes to low or moderate income families. Only government entities can purchase dollar homes, and there's a special section of that as well. Now, that doesn't pertain in our area. We have not had to deal with dollar homes, so don't worry about that. And lastly, HUD approved nonprofits. They can also purchase homes for rehabilitation and resale to first-time home buyers and low to moderate income families. Nonprofits may not bid on dollar homes and will only receive a discount if the property is purchased during the lottery period as well. And a question that comes up under this is, can residents of other countries purchase a HUD home? Yes, HUD homes may be purchased by residents of other countries, provided they can secure financing or pay cash for the property. Please note that when a bid for a foreign national is submitted, a valid ID number must be entered in the Social Security field. Foreign nationals who do not have a valid U.S. government ID may not purchase a HUD home. Okay, so they've got to have some sort of Social Security number or I-10 number to be able to put that in there. Next question we get a lot is, will HUD pay for any closing costs and the selling agent commission? Yes, HUD will pay up to 3% of the gross purchase price in closing costs for owner-occupant purchasers only that are considered to be reasonable and customary in their jurisdiction where the property is located, if submitted within the bid. So they don't automatically pay it. It's something that your realtor needs to be educated on, that they need to go ahead and submit that request for the up to 3% when they put the bid in HUDHomestore.com. Now, of course, FHA allows more than a 3% concession, but HUD, when they're selling a HUD or foreclosure property, they will pay up to 3%. You can't ask for 4, 5, or 6%. It doesn't allow you to. Also, HUD will pay up to 3% of the purchase price for the selling agent commission, and that also gets entered into the sales contract. It is important to know that HUD will no longer pay a sales commission to the selling agent or broker on an investor sale if the investor purchase is also selling agent broker on that property. So if you're a licensed realtor or real estate agent or broker and you're buying a property for yourself as an investment, HUD will no longer pay you the commission in regards to that. And that's on line 6 of the offer screen, and where you can, line 6 is the local listing broker's commission. So also you would put in the commission when you're submitting the offer, and they will pay up to 3%. Another question that comes up a lot is, when can the purchaser get a home inspection done? So it's really important to remember that all HUD homes are sold as is. HUD is not going to make any repairs to the property at all. After the contract has been ratified and signed by all parties, the buyer may conduct inspections. Any inspection, test, or risk assessment are performed at the buyer's expense. That also leads us into the fact that the buyer must request permission to activate the utilities with the field service manager assigned to the property, which may require a non-refundable deposit. The purchaser will be responsible for any damage that occurs as a result of the inspection. So that is a process that we have in regards to getting the utilities on. And then next, in regards to inspections, please note that pools are not to be filled at any time. HUD REO properties do not require pools to be filled, which differs from the front-end FHA transaction, which lenders will understand what that means. Pools are also not required to be covered as long as there is a secure fence surrounding the backyard. Important distinction there. A secure fence surrounding the backyard, not around the pool specifically, but as long as the backyard is fenced and the gates are locked, then that pool should be able to get through without being up and running. HUD directive states that the lender is to obtain an as-is statement from the purchaser, accepting the pool in as-is condition. If the underwriter will not accept this method, the transaction must be canceled. In this situation, please submit a cancellation request form along with a lender denial letter as supporting documentation. Please be advised that if BLB Resources discovers the pool has been filled, it is grounds for cancellation of the transaction. Now, I've actually had that come up a couple of times regarding pools because it does differ from the FHA front-end transaction. So if a buyer is getting an FHA loan on a property that has a pool on it, on a HUD home, this does come up, and it's usually just a matter of educating the lender so that they are aware of the overall situation. Next, HUD has a very strict as-is policy, meaning that all their homes are sold in as-is condition, excuse me, and without any warranties or guarantees. The buyer has 15 days from the date of the contract is accepted by HUD to conduct any inspection. All inspections, tests, and risks assessments are performed at the buyer's expense. You may not occupy, repair, or improve the property prior to the close of escrow. Very, very important. Under no circumstances may the purchaser occupy the property prior to the close of escrow. You cannot put your personal property in the home, yard, or garage, or anywhere on the property prior to the close of escrow. You cannot park your vehicles in the driveway or the garage or anywhere on the property prior to the close of escrow. Once the property has closed, then the buyer can rekey the property and take possession of it. This next page here, page 9 of the Q&A, gets into those insurability, and which goes along with the different financing types. So the first one is the insurable FHA 203B, and we abbreviate that by calling it IN, or an insurable property. Properties listed as insurable are going to qualify for FHA 203B financing. This disposition represents properties that do not have minimum property requirement NPR repairs at all. So the way that HUD determines that is they take a look at a FHA approved appraisal, as well as what they call a property condition report, and several other factors that they consider. Once they take a look at all those, they will tell us which type of insurability and financing this property is going to qualify for. So again, the first one is insurable, and that is a standard FHA 203B financing can be used to purchase that home. The second is what the majority of my homes have fallen under this category, and it's called IE, insurable with escrow, FHA 203B with repair escrow. Now, we get a lot of questions about this repair escrow because it's something that's not typical in a lot of transactions, and it is somewhat unique to HUD Homes. Basically, what happens is properties listed with this insurable with escrow, IE category, qualify for FHA 203B with repair escrow financing. This disposition represents properties that have NPR repairs, which must be addressed post-closing. repairs that have to be done after closing. The NPR repairs cannot total more than $11,000, which is a $10,000 repair limit plus a 10% overage allowance. The necessary repairs are itemized in the disclosure found on the addendums tab of the property details on HUDHomestore.com. The repair escrow amount is the financial responsibility of the purchaser. The repair escrow is never a credit to the purchaser. The lender holds the money for repairs in an escrow account until the repairs are completed. FHA allows up to 90 days after the closing for NPR repairs to be completed. However, some lenders may have different NPR deadlines. In my experience, they want it done as quickly as possible. Then they'll send the appraiser back out to verify. The repair escrow only applies if the buyer is using FHA 203B financing. The repair escrow does not apply to financing outside of 203B or to cash purchases. If the purchaser is using non-FHA financing, conventional, USDA, VA, etc., or paying cash, the repair escrow is not applicable. And again, that's where the majority of our questions come in regarding the insurable with escrow holdback. So if you're doing a transaction with that, I would reach out to the local listing broker if you still have questions about it, and they can walk you through that process as well. Next category is uninsurable. Properties listed as uninsurable do not qualify for FHA 203B financing. Typically, these properties have some NPR repairs exceeding $10,000, or they've got some other reason why they don't qualify for FHA financing. And these typically would go conventional or cash purchases, or just some other non-FHA type of financing. And lastly is UK uninsurable, which is a category of uninsurable, but still eligible for 203K financing. Now, we've been talking about 203B, but in this case, we switched to 203K, which is a rehab loan for owner occupants. And that's an FHA product as well. So some properties are going to qualify for that specific category. They do allow gift funds to be used in the financing of a HUD home. Many options for financing, including gift funds, and they do have specific requirements of what they want on that gift letter, and those are detailed out here as well. And again, closing costs, HUD will pay up to 3% closing costs, and this details what exactly they will put in here. But they will put in as allowable for you to use towards those closing costs. So some closing costs are automatically paid by HUD. The ones that are automatically paid are the proration of property taxes, any recording fees and charges for the deed, and a document fee. HUD will not pay for a lender's certification, but then it does let you know what guidelines you have to follow in regards to what you can apply those closing costs for. Time frames. They will allow 30 days for investor purchases, 45 days for owner-occupant purchases, and then they bump that up to 60 days if the buyer is using the 203K financing, just because that does take a little bit longer to process sometimes, because you're typically having to get bids and do some other things above and beyond what we would normally see. Again, HUD has a strict as-is policy. They do want pre-qualification letters before they will ratify or execute a contract, and it tells you exactly what they want on that pre-approval or pre-qualification letter. HUD no longer provides a copy of the appraisal. This is a question we get a lot because HUD used to provide the appraisals to the lenders, and so they could use the existing appraisal. They stopped doing that a few years ago. So HUD will not provide a copy of the appraisal. HUD gets the appraisal for marketing purposes only. A buyer will have to get their own appraisal at their own purchase, at their own expense. This goes over the NPRs and the repair question. So what are NPR repairs? So typically NPR repairs are repairs for any items that are going to affect the safety, security, or soundness of the property. And if you refer to the HUD handbook, section 4000.1, it gives a list in detail. And then this also talks about what happens if other repairs come about during the home inspection and appraisal process, and those can be added in to the escrow holdback as well. And perhaps you were getting a regular FHA 203B on an insurable property, but the new appraiser discovered something that's going to move it to a IE or insurable with escrow holdback. And so if that happens, it's okay. We just have to request to change the financing type, which we have a form to do that on. And then we detail out why exactly we're doing that. So we do have ways to work around that. The underwriter is requiring certain repairs be completed prior to close of escrow. How do we handle this? So again, all HUD homes are sold as is, and no repairs can be done at any time prior to closing of escrow. If the transaction cannot close due to this issue, then the transaction unfortunately will need to be canceled. So HUD understands that the underwriter has the final say of whether or not they're going to lend money to somebody, and that they take into consideration, the property condition. So HUD can give guidelines of what is acceptable, but they cannot force the underwriter or the lender or the bank to lend on that property if there's something they don't feel comfortable with. So if that is the case, then the transaction would have to be canceled, and the lender would have to issue a denial letter stating the reason why it was canceled. And in that case, we could return the buyer's EMD to them. Pools, we did discuss pools already. And this just also goes back to changing the financing type. So I think we covered that as well. And our next section here talks about inspection questions. Will the seller provide a copy of the property condition report? Yes, you can download it on HUDHomestore.com. Myself, I also attach it as an attachment on the MLS, and we will send it to you with our disclosures as well. Will the seller provide a termite inspection? BLB will order a termite inspection if the property is in an area where wood destroying organism inspections are mandated by state or local jurisdiction, and the property is being sold with FHA insurance, and the property is located in an FHA designated termite probability zone. If it's conventional or cash or some other type of financing, they will not do that. So will HUD complete the termite clearance? So HUD will clear active infestation. They will not clear all the miscellaneous Section 1 items, but they will clear any active termite infestation. So if it needs to be tented or treated, they will do that in escrow, but they will not do dry rot repairs and those types of things. If the lender is requiring that, the buyer can add it to their escrow holdback as well. And the next one is in regard to lead-based paint. I've had this come up a couple of times as well. So HUD will do a lead-based paint inspection for homes that are built prior to 1978 if the buyer is using FHA financing. That would include all types of FHA financing, 203B, 203B repair escrow, and 203K. If the buyer is not using FHA financing, then HUD will not do that. If it is found that there is lead-based paint, HUD will pay for the stabilization and clearance not to exceed $4,000. If it comes over $4,000, the buyer may cancel the transaction and get their refund of their EMD back, or they may add it to their escrow holdback, or they may change their financing type to a 203K, which is a rehab loan. Over the years, it's been almost 10 years that I've been selling HUD homes, and I've had a lot of older properties. I can recall 2 instances where there was lead-based paint. One, the cost was under $4,000, and they did remediate it. And that was a very old home, I want to say, built in like 1910, 1920, something like that. It was a small home in Atwater. Second one was in Merced, and what it was somebody had replaced some of the windows for some really old wood windows. I think they liked the look of them. And there was lead-based paint on the windows, and it did exceed their allocated amount. And so the buyer had to put it in with their 203K financing, and that is how we were able to close that transaction. So again, it does come up once in a while, but in my case, it's been pretty rare. But the 2 times that it has come up, we were able to deal with it and close the home successfully. So there is definitely a plan for it as well. Lastly, we talk about condos. Condos no longer require approval in order to get FHA financing. So that is something that HUD has allowed to have FHA financing on condos that are HUD REO properties as well. And the last couple pages here are just some kind of miscellaneous questions that we don't have to deal too much about, but it's good general information for you as well. So lastly, I'll leave you with this. If you're a lender and you're lending on a HUD home and you would like access to this information, you can call or email me anytime. I'd be happy to send it to you. Our number here at the office, 209-385-1200, JulieKaley@yahoo.com. You can find me online, mercedhomesrealty.com, and contact me through my website as well. I'd be happy to send you a copy or give me a call. I'd be happy to answer any questions you might have. Or you may reach out to BLB Resources. They're open Monday through Friday, 8 a.m. to 5 p.m. However, note they are closed on federal holidays. And we also have their address, phone number, and website for you as well. Okay, so again, it's just a little bit different of a process than maybe you're used to as a lender, but it's totally doable with just a little guidance and hopefully your local listing agent walking you through the process. So I really hope you found this information helpful, and any questions I can answer for you, please reach out. Be happy to help you. Again, my name is Julie Kaley, real estate broker here in Merced, California. Thank you so much for listening and watching.